Hello and welcome to a brand new edition of Inside Out on the Road, a show where we focus on individual stocks with in-depth analysis. We deep dive into financials and we also tell you about the key risk and triggers going forward. But let's get straight to our first stock on the show today. My colleague Sonal gets us a very special deep dive on Mahanagar Gas.
If you are living in Mumbai, you definitely must have come across Mahanagar Gas's CNG stations and seen domestic connections in your own house for gas as well. So that is the company we are going to be talking about today. It is the sole authorized distributor of CNG and PNG in Mumbai, adjoining areas and Raigad as well. Now, Mahanagar Gas, if we look at the numbers, it has 313 CNG stations, 2.17 million domestic gas connections, around 4,500 industrial customers and a pipeline of 6,535 kilometers. Company did a capex of 580 crore rupees in FY23. They plan to look at the same amount in the next two financial years as well for their growth plans. The revenue CAGR has been strong in last 5 years at around 22.5%, and profit growth in the same period has been to the tune of 10%. Now, the important metric to look at when we track city gas distribution companies is Ebitda per SCM or Ebitda per unit of volume sold by the company. For Mahanagar Gas, it was at a record high level in FY21 at around 11.5 rupees per SCM. It did see a decline from those levels, but those were the normalized levels because remember, gas costs, they were at a record high. That is their input as well. Now, what is the outlook going forward? How does this business really work? How do you get your gas in your cars and in your homes? We'll understand the business with the management. Let's go.
I can show you around somewhere.
And it's time to take a deep dive into Mahanagar Gas, understand everything about the business, and no other than Mr. Ashu Shinghal, who's the MD of the company, joining us now on the show. Mr. Shinghal, it's a pleasure to have you with us on Inside Out. And you know, this is a product or a service which everyone uses on a daily basis. So it's only fair to tell them where does it really come from. And on the show, that's exactly what we plan to do. We want to understand what is the business of Mahanagar Gas. So let's get it started now, sir. Can you explain it to us? So many technical words, spot LNG, APM gas pricing, CNG, PNG. What is exactly the business? What is the input here? How do you source it? How do you price it? What is the cost involved in your business?
Thank you so much for inviting me for the conversation today. See, the business is very simple. We procure gas, right, from ONGC, is the primary supplier, and Reliance, BP and other domestic player. Since the domestic gas is not completely available, so we import it also, which is called LNG, liquefied natural gas. So we procure it, then we distribute it in a city gas distribution network. So we have to keep safety utmost because that is the prime importance we are dealing with the public. So we do some processing like compressed natural gas, right? CNG is a normal term which I think most of us are aware of. So we compress it to around 220 kg per centimeter square. And then it is filled into the cylinder and used as a vehicle. CNG is one segment. The other is domestic pipe natural gas, which we call as PNG, which is a substitute to LPG. So LPG goes to the rural area and domestic buildings get buildings or other households get PNG. Third is industrial and commercial. You see restaurants, you see industries. So all those are our customers.
Okay, so exactly that was my next question. So many customers. But when we talk about the sourcing mix, it's a mix of both domestic gas or imported LNG as well. Is domestic gas only used for CNG? Like, can you interchange the usage of LNG or domestic gas for different segments? Because usually when industrial comes to mind, we always talk about LNG. How does that work?
Yeah. See, the government wants to prioritize certain sectors, which we call as priority sectors. Primarily, that means pipe natural gas and compressed natural gas. And if you see on cost basis, the cost to serve to a PNG segment is very huge. Almost 25,000 per connection we incur, and we are allowed to charge only 5,000. So to compensate for that, government said that, okay, we'll give you the cheapest gas. And the cheapest gas as of now is domestic gas because LNG is traditionally costly. barring a few periods, most of the time it is much costlier than the domestic gas. So in the wisdom of government of India, earlier the priority was different. They used to give fertilizer, followed by power, followed by LPG, and then city gas distribution. But they found that CGD is the upbringing area. It is more financial institutes from across the world are coming up. So they decided to revert this order maybe 7-8 years back. They made CGD as the first priority, then LPG, fertilizer, and then other sectors.
Okay, so it's interchangeable. LNG can also be used to...
Now the other aspect of it, sorry, I'm a bit longish.
Yes, please go
The other part is that domestic gas was not sufficient to meet the complete requirement of priority sector. So what they did was, last quarter's consumption will be prorated to the next quarter, and then they see whatever is available in the kitty is given. Balance is to be imported. So around 90% we get the domestic gas, and balance 10% for the priority sector is met through the imports.
So what is your split in volumes in CNG, PNG and industrial volumes right now?
Around 3.45 MMSCMD, million standard cubic meter per day is our consumption. Out of it, around 72% is CNG, so 2.7. And 0.45, around 0.4 and 0.4 is PNG, and 0.4 is industry and commercial.
So the other term that I wanted to understand was exclusivity of your infrastructure. For Mumbai, it's still 2030 in its adjoining areas and 2040 for Raigad. What does exclusivity of infrastructure mean? Is it connected in any way to the open access norms that had come out by PNGRB?
See, exclusivity, when you speak, there are two types of exclusivity. One is infrastructure exclusivity, or we can say physical exclusivity. Other is marketing exclusivity. So 2030 and 2040 numbers, when we are saying, they are infrastructure exclusivity, which keeps on a rolling basis. I mean, if in Mumbai the roads are created, just for an example, there is no other party who is going to create a road parallel to the existing road. Same with pipelines also. If the pipeline infrastructure is laid, there is nobody else who is going to lay the same infrastructure again in the crowded areas. So what regulation says is that if a company is given the license and they create the infrastructure, they have the right to create the infrastructure. The marketing exclusivity is after 8 years, any other party can use that infrastructure by paying the tariff.
Okay.
So road is like a tolling road.
Yeah.
You have the road, anybody can use it, they pay the tolling charges for it.
Okay.
So that is marketing exclusivity, which is 8 years.
So basically, if you put out a pipeline today, after 8 years, somebody else can come and use it and they have to pay a tariff to you.
Suppose I create a capacity of 100 million, so only 25 will be used for the third-party access, which is called open access.
Oh, okay, exactly. That is the simplest way you could actually explain open access, other than using those technical words which were there in the document, right? So this is about open access. So is your pipeline, any of it coming for that 8-year period? Like, how does it work?
That is already over, I think, for all the 3 GAs.
All the 3.
But the matter is sub judice because there are fine nuances attached to it. That when the market exclusivity should be over, whether the market is ready to adopt it. So the matter is sub judice, so I don't want to comment on it. So whatever is the court's decision, we will comply with it.
And how does the OMC commission work?
Yeah, commission is a bilateral thing. I mean, it is between OMCs and us. We tell them that this is what we are spending in terms of giving the equipment. They say this is what we are giving you the benefit. So it's a mutual thing.
Okay, so right now it's as a percentage of volume, say 3.5–4% is, I might be wrong, what would the number be here?
I think it is more than that.
More than that?
In the sense that 3–4% you are saying about the margin?
What are the commissions that you pay?
Yeah, around maybe say 5 rupees 40 paisa is, earlier we used to give 4 rupees 5 paisa out of the sale price of, let us say, 79 rupees.
Got it.
So I don't know, maybe 10%.
Okay, yeah, of course. It's a little less than 10% there.
If it is 5 rupees 41 paise, which is the current regulation by the government, so we are paying that amount, so which is slightly more than that.
Okay, so now let's talk about what could the expansion plans here be. You recently made an acquisition, the street cheered that as well, because for a long time people are wondering how will Mahanagar gas grow from here, because 3 geographical areas is where you function. You have now stepped into a volume growth arena. What are the growth triggers? You said 3.4 MMSCMD is the current volume number. Say 5 years down the line, what Could you double that number? And will you be looking at more acquisitions to do that? What will drive growth for Mahanagar Gas from here?
See, the growth is a function of demand picking up and also the affordability of customers on whatever options we are giving it to them. So organic growth was limited because with the 11th round coming up, there was hardly any new round, any new good city which is coming on the block. So the other way to expand is to go inorganic way, which we were scouting several opportunities. And fortunately for us, Unison Enviro was a right fit in terms of potential to grow as well as the valuation and the contiguous nature of our geographies, as well as the MWP, the minimum work program which they have committed, is more sensible and reasonable. So we went in for that and it went into our place. Now the SPA is signed, which is called Sale Purchase Agreement. However, there is a 5-year lock-in period from the regulator side, which is getting over in September this year. So in October or November, we will get this area. So if you see about the volume, around 0.1 SCMD they are taking, and it is expected in another 7 to 8 years, we can roll those numbers to around 1 SCMD.
Okay.
And our own growth is growing at the rate of 5 to 6% CAGR. And if everything goes our way, and we are doing several plethora of steps to see that these numbers are maintained or bettered. So if we go to 7 to 8%, then I don't know, maybe 5-6 years we will be able to double MGL numbers, and we are able to 10 times the current number of Unison.
10 times.
That is 0.1
yes,
to 1.
To 1 MMSCMD.
Although the base is low.
So low, right.
Yeah.
No, but 10 times would not be bad if you're able to, scale up your current acquisition. Anything else in the kitty? You spoke about not enough geographical areas being in the kitty. CNG is one part, getting new geographical areas is one part. Any other segments you would be looking at? We were talking about these newer energy or new energy areas.
Right.
People are talking about setting up EV charging stations. People are talking about getting into hydrogen. Your peers have done that.
Yes.
Is Mahanagar Gas looking at getting into another field at all?
Absolutely. I mean, see, the future is that we need to develop a vertical, which is at least maybe say 25% of top line and bottom line, maybe 7 to 8 years down the line. So that is the broad vision which we have. Now, what are those areas? Some of those areas which you mentioned is hydrogen, because the National Green Hydrogen Mission government is coming out with some regulation, and they may mandate maybe 3 to 5% of blending in CGD network also. So we should be ready with that.
Correct.
Therefore, we are talking to several parties, and maybe we enter with MOU with some of them. The other part is LNG in long haul, which we have recently entered an MOU with. I don't know if you are aware of it. Baidyanath LNG is one of the pioneer companies in India who were the company who laid first 2 stations in India for LNG dispensation. So we have signed an MOU with them, and we will like to increase our footprints on the LNG sphere. The other is compressed biogas. Maybe very recently we are talking to BMC to sign an MOU with them and put up a biogas plant in Mumbai itself. The others could be electric value chain also we are exploring, that if there is a right fit, because electric value chain is crowded. There are automobile companies who have OEM sphere. There are electricity utility companies, right, who have the electron advantage of what molecule advantage is there in the gas industry. So there also charging station is again, depends. If you are getting the electron from some other company, there is hardly any margins available on that. So we have to look at from a all bigger perspective. And lastly, we are also looking up for some integration in the upstream side of CGD manufacturing.
Okay.
So anything like dispenser or type 4 cylinders or meters or things like that.
Big plans in place, 25% of the top line and bottom line in next couple of years.
That's our plan. Like, yeah.
That's, your investors will be very happy to know that for sure. Let's talk about Ebitda, because you know what happened, we saw record high gas prices last year. We did see a relief coming in with the Kirit Parekh committee's recommendations. You have passed it on to your customers as well. The entire pass on has happened from Mahanagar Gas. Your FY21 EBITDA per unit was really high. It was at a record high as well, around 11 rupees.
That's right.
If at all you plan the future in terms of segments, you think you can get back to those levels, or that was a one-time EBITDA? What would the normal EBITDA be for the next 4 or 5 years with Unison also getting integrated?
Yeah, I mean, there are 2-3 aspects to the EBITDA margins per SCM when we talk about it. That one is that how much profit you want to earn, vis-a-vis how much volume growth you want to earn, right? So last year we saw that when the domestic gas was at a very high prices, so $8.5 per MMBTU, and had this Kirit Parikh committee recommendation not accepted by the government, it would have gotten up to maybe $10 per MMBTU, which would have been really painful for the CGD companies. So government, in very nice gesture, they have come down with this floor and ceiling part. Now the EBITDA is a function of what is the alternate fuel cost, how much we can charge, the profit we want to earn, and the volume we have in future vision, what is the volume growth. So as soon as we reduce these prices, 2.5 rupees in February, I think we were the only company to reduce 2.5 rupees then, and we are the company which gave the highest margin pass on during the Kirit Parikh recommendation also. So putting together, we have reduced 10.5 rupees. So after this reduction has done, we have seen say uptick in the conversions also. So that is the balancing which we need to do. That now you talked about 11 rupees or slightly more than 11 rupees EBITDA margin. So we are not for it. We don't want to do it. That might have happened because the domestic gas was dirt cheap that point of time. Whereas last year we had 8.5 rupees EBITDA. This year we are 9.5 rupees. So 8 to 10 rupees, barring that 1 year perhaps, we have been doing our business in that range. And we expect to continue in that range.
So you've told us so much, right, in terms of your expansion plans, what are the new areas you would be looking at. Generally, what is the capex that you're looking at, say, next 2 to 3 years down the line when you talk about expansion or maybe acquisitions and getting into the new areas? And will you require to take some debt for that? Is it mostly maintenance capex that you take every year? What is the outlook here?
Normally, we have been doing around 600 to 700 CR per year, and that's the trend we are expected to go up. But some of these investments which we talked about, then that number may increase slightly more than that. So the treasury surplus is around 1500 CR which we have currently. So the Unison acquisition, which is around 530 CR, is expected to come from treasury surplus. Otherwise, if you see, we earned PAT of 790 CR. We have a depreciation of 250 CR. And we paid dividend of 260 CR. So on cash basis, dividend and this depreciation nullify each other. So we have around 750 to 800 CR available in our kitty for doing the capex.
Thank you so much, Mr. Shinghal, for joining us here and explaining everything about Mahanagar Gas. Okay, with that, we'll take your leave on this edition of Deep Dive on Inside Out. Back to you in the studios.
All right, that was a deep dive into MGL. But time to slip into a short break. When you come back, we'll focus on another interesting stock. Control Print is the stock on our Spotlight segment. Stay with us.